So let's move to internal control. Internal control. Internal control. Good afternoon. Internal control. I work on some tonight. Sorry, chapter 7. I work on some tonight. And I've been promising you, it's not, there's something that is happening that is outside my control. So he didn't allow me to have time to work on those things. So, but I apologize. I will surely work on this. So let's go to internal control. Now, before we go to internal control, let's look at the meaning of internal control. Meaning of internal control. Let's look at like of internal control. What is internal control? According to Committee of Sponsoring Organization of the Tradeway Commission, define internal control. Internal control is a process. Effected by an entity board of directors. Effected by an entity board of directors, management, and other personnel designed to provide reasonable assurance. Let me go again. Internal control is a process. Internal control is a process. Effected by entity board of directors. Effected by entity board of directors. Management and other personnel designed to what? To provide reasonable assurance regarding the what? Regarding the achievement of objective. That means for them to achieve their objective, for the entity to achieve their goals and objectives, he has to put something in place, a process in place, a system in place. Are we together now? Because that process can also be called a system or a framework in place to ensure that those things are, that goal or that objective of that organization is achieved. Are we together now? Just imagine. Let me give an example. Let's imagine you are into production of pure water. Your company is into production. Now, if that pure water equipment is now sold, what happens? Will they achieve their goals and objectives of profit maximization? Will they be able to produce? They won't be able to produce. So putting a security in place to protect that asset is internal control. So internal control, and who are those that affect the internal control, or that ensure that internal control is being implemented? The board of directors, the management, and other personnel. Other personnel can be the internal auditor, because it's part of those that will ensure that the internal control of the organization is being implemented. Now let's go. So we have defined what internal control is. That it is what? It is a process effected by an entity board of directors, management, and other personnel designed to provide what? Reasonable assurance regarding the achievement of objective. Are we together? Now let's move forward. Now I want to ask us, who is responsible for internal control within an organization? For design internal control, it is the management or the board of directors. Are we together now? Because it is part of the governance rules and responsibility of the board of directors to ensure that there is effective what? Internal control. And it's going to be implemented by who? By the management. So everybody, both the board of directors, management, and others personnel have a role to play when it comes to internal control. It is not the responsibility of the auditor to ensure that the internal control is effective, or putting in place internal control is the responsibility of the management. Let's look at the importance of internal control. Don't say they can't ask all these things. All these things are the 3 mark. I just check advanced audit. Yeah, last year question. If you see the question they asked, they just wrote this thing, and what they were asking is something that has been repeated in the material all over and over again. 3 marks. They said, what is the objective of an auditor according to IS 200, International Standard 200? Okay, you guys will not do it too, so let me talk. Now, what's the importance of internal control? You remember what I was explaining in the lab some class ago? I was explaining system-based approach. That system-based approach is part of audit strategy. You know, I told you that there are 4 audit strategies. We have risk-based approach, system-based approach, we have substantive approach, and we have statement of financial position approach. Now look at it now. Now, for an auditor to use system-based approach, he must be sure and he must carry out a test of competence that there is effective internal control within the organization is strong. Because internal control system, meaning that you are relying on the internal control put in place that is effective. That if the internal control is strong, there will be issue of material misstatement in the financial statement. So can you see? For an auditor now to perform an audit using system-based approach, it will need to ensure that the internal control within the organization is what? Is effective. Are we together? Is effective. Now let's continue. Now look at this. I think that system-based approach is when the auditor is relying on the work of the internal control. That means if the internal control is effective, it means that the risk of material misstatement in those transactions could have been detected by what? By the internal control. You now rely on the work of internal control. But if the internal control is not effective, it cannot use a system-based approach. Are we together? Look at this now. Now, when an auditor is planning and is conducting risk assessment, you know why an auditor is conducting risk assessment? To check for risk of material misstatement in the financial statement. Look at it now. Now, during planning, the internal control, you know they will look at the internal control. Now, if they look at the internal control and they see that the internal control is weak, are we together? They have assessed that the internal control is what? Is weak. So, internal control is weak. Weak internal control. Weak internal control. Are we together? That means if it's weak internal control, they cannot do what? They cannot use system-based approach. Are we together now? That means what they will use, what the auditor will use is what? He will carry out a substantive what? Testing. And the substantive testing is going to perform. That means if the transaction in that organization or that is meant to be paid that financial statement, let's say it's 200 transaction, you may decide to perform substantive testing on about, let's say, 85% of the transaction to check for material misstatement. Are we together? So we need to carry out what we call extensive or large substantive testing. No, when you mean extensive, that is going to focus more on substantive what? Control. On substantive testing. Are we together? But if the internal control is strong or effective, strong internal control, because they can ask you to explain this thing in written, but I'm using this diagram to explain it for you. You know, when they are doing the planning and the research and the risk assessment, on paper, the internal control may be what? May be strong. So if the internal control is strong, they will not just rely on the internal control. That, okay, we have access on paper, the internal control is strong. No. They will not stop there. They will not go and use system-based approach. Are we together? So what they will do is that for them to rely that truly this internal control is strong, they will now do what we call test of control, to test the control, that this control, even though it's strong on paper, after we have accessed it, are they really what? In existence? Are they really implementing it? Are we together? Someone can say he has a security of, let's say, 10 security in his house on paper. But for you to know whether that control is actually existing, we need to visit, to check. And that's what we're saying. They will now carry out what test of control. Test of control. Now, test of control is you testing what? The existence and implementation of the control that have been established during the planning stage. Now, look at it now. When the control is strong, look at it now. When you now carry out substantive, look at this. When you carry out test of control, you now discover that what the control they say they have designed and implemented is not strong. Are we together? You cannot use what? That means you now need to move towards to substantive testing. To what? To extensive what? Substantive testing. That means what you are doing that you will need to test more volume of transaction, large volume of transaction for you to know whether there is material mistake. But if when you now discover that the internal control is what? Is strong after carrying out test of control, what you have is still what? Is still substantive testing you will do. But that substantive testing you will do, that just like this one now, you know, you say is 200, let's say 200 transaction is being made. 200 transactions are the transactions are made of the preparation of the financial. You can now say out of these 200, that is only what you will just focus on maybe 40 or 35. Unlike large, you testing large transaction. 85% of the transaction has to be tested for you to gather that is material mistake. So when you know that, because the reason why you are now reducing your substantive testing is because you are finding out that the internal control is strong or is effective. Because it's effective now, you know that the risk of material misstatement could have been what? Discovered by the internal control. So you cannot rely on the work of the internal control system. Now, you now carry out a what? A reduced substantive what? Testing. Are we together? Are we together? Are we together? So this is how it is. So after I've done that, at both stages, whether strong or weak, you will now need to review the financial statement. Are we together? You are going to review what? Review of financial statement. So after I have reviewed using substantive testing to review the financial statement, what do you do after? You hide what? You issue the audit report. So issue audit report. We can see now that you cannot just rely, you have to carry out test of control on the internal control to be sure that the internal control is strong or not. Now, let's move forward. How are you going to determine that the internal control is what is effective? Are we together? How are you going to determine? What are the things that determine that the internal control is what is effective? So there are 3 things. There are 5 things that have been identified by International Standard 315. There we have what we call components of internal control. It is when these components are in existence, are we together now, that you can say there is effective or strong internal control. Are we together? So let's look at components of what? Of financial. Component of financial. Component of internal control. What am I saying? So we have 5 components. See, it's just like you saying that a car. For you to call something a car, it must have a body, engine, tire, and all these things. That's when you can say this is a car. But if you see an engine of a car here, will you call it a car? You call it an engine. That's what we are saying. That these 5 components must be what? Must be in existence for an internal control to be what? To be strong or to be effective. They must be what? These 3 components must be put together. And these 5 things must be put to what? Together. Now, what are the 5 components of internal control? So let's look at the 5 components of internal. So we have components of internal control. Sorry. So we have what we call control environment. We have control environment. We have entity risk assessment process. We have control environment. One is what? The control environment. Two, what do I call 2? Entity risk. Entity risk to be entity risk assessment process. 3, we have what we call the information system. So 4 is the control activity. Control activities, and that's the internal control himself. Are we together? We have control activities, or you call it internal control. That's the internal control himself. Internal control being put in place. So 5 is monitoring of control. Monitoring of control. So we have 5 monitoring. Let me write it here. So let's look at each of these. Okay. Review of financial statements. Okay, sir. So let's look at the component. If those components are not in existence, if these 5 components are not in existence, it means that the internal control is weak. Are we together? So what determine? They can ask you that what are the components that determine the effectiveness of internal control? They may not have direct these are that, or they have some component of financial component of of internal control. Why am I saying financial statement? Component of internal control. Well, I'm used to that. Now, look at this now. You know, I've told us that when it comes to question in the exam, it is not everything that is what? There is case study. It's not, there are some questions that is direct. They can say list 5 components of financial statement and explain. They can even give you like 4 terminologies and put you to 2 marks or 5 and say you should write short note on this one, on this following. It's not everything that is what. So please don't allow these things to what? To accumulate. But however, let's continue. Now, what I say the first one is control environment. Now, what is the control environment? Control environment is referred as general attitude. The general attitude to internal control. That means the general attitude of management. The general attitude of management and employee. The general attitude of what? Of management and employee in the organization towards internal control. Look at this now. Look at this. If the head in an organization, the management, which are the head, are we together? They are not taking internal control serious. Will you have effective internal control in that organization? The management are part of those that are what? Are embezzling, or part of those that are doing the wrong thing in an organization. Are you telling me that there will be effective internal control? It's just like you having a school, a principal, always coming late, always coming early to the office because of his attitude. Other people will be encouraged to be coming even without enforcing it. Are we together now? Are we together? So you see some organization, everybody knows that you are not supposed to do this, and everybody will not do it. That means they have an attitude of ensuring that what the internal control put in place is what is being followed. So because they have it, what will happen to that internal control in that organization? It will be effective, it will be strong. Are we together? And this control environment, it involves awareness, the action. Are we together? The awareness. So everybody in the organization are aware of the internal control. It's not that the internal control is only peculiar to what, or is only limited to some certain people. That means everyone is aware of the what? Of the internal control. Look at it now. If you are not aware of the procedure in our organization, that means you may be doing contrary to what? To the procedure without even knowing. So awareness is part of the attitude. Are we together? And the action of the management. Look at it now. Someone that always wastes the resources of the organization is not being punished. Is not being punished for it. Now look at it now. If another person that is doing it effectively, because of the attitude of the management, not handling the wastage that person is conducting. Wow, because why am I doing it even? Why am I even doing it right? Let me to be doing it. Just like when I was in primary school, if my mom should buy a biro for me and sees me with 2 biro, with 2 pens, she's going to ask questions. Where do you get the other biro from? Are we together? And if by today I'm asking for, in 2 days time I'm asking for another biro, the one I gave you yesterday, what have you done with it? Where am I bring it? Where I put it on? Where I bring it? What's it? That is what we are calling what? Internal control. But if she's not doing that, what happens? That means I will be using pen in there because I know it's surplus. Because there is no control environment. Are we together now? Are we together? Now let's continue now. Let's look at the components. What are the components that of control environment? Are we together now? The commitment to competence. Are we together? The committed to what? To competent. If the management are competent, are we together? Or they are participating in what? In the internal control. Just like I was telling someone that if the management are not taking the internal control serious in an organization, the internal auditor will be what? Will be useless. Internal auditor is also making recommendation, and those recommendations are not being acted on. Because the management are not participating in the internal control of the organization. And the internal control cannot enforce this. It is the management that can enforce this. Are we together? The management philosophy is also part of it. If they have a philosophy of not taking into consideration how important internal control in an organization is, what happens? It will not be effective. The organization structure. You know, we talked about internal auditor. We talked about that. And if an internal auditor is now reporting to what? To finance director, will it be effective? The person that is supposed to be auditing is now reporting to such person. That means if the organization structure is not being properly what? Designed, that means they will not be what? They will not be proper what? Control environment. What about the integrity and the ethical value? If the people in the organization does not have integrity, what happens? They will be looking for ways in which the loopholes in the internal control. Are we together? Now let's move forward. Let's go to number 2 now. Is entity what? Entity risk assessment process. What are we saying now about risk assessment processes? The what we call risk assessment processes is a way of you identify how can we identify the risks in the organization. What are the risks that the organization is exposed to? Assessing the risk, meaning that when you are assessing the risk, you are looking at the impact of that risk that you have to identify. What are the likelihood of that risk occurring? That means you are looking at the possibility of the risk occurring. Remember this thing. It's believed that if the impact is low, if a risk, the impact of the risk is low impact, and the occurrence, that is the frequency, the chance of that risk occurring is low, the probability of the risk occurring is low. Are you, as an auditor, that means the probability of it occurring. The probability of it occurring is low. As an auditor, will you focus on that risk? It is not all risks that an auditor identify. Are we together? That an auditor will focus on. And the same thing is applicable. Don't forget we are looking at the internal control component of internal control. I'm just explaining that now. It means that is the organization, did they have a process in place to identify risks and to assess risks and to manage the risks on a continual basis? They have it. Now, if they have it, am I communicating now? That means it's one of the components of internal control. Are we together? If you have identified, they have identified, the internal control put in place in your organization has able to identify that there is a risk likelihood of this asset to be stolen. Wow! To manage it, they will now keep it in a safe place. Because the system, the internal control put in place has been able to identify such thing. Don't forget that internal control mechanism is a process and also is a system, right? That means the internal control department is also part of It's also part of the structure of internal control. Are we together? So if you don't have that process in place, are we together? That means a strong internal control system in an organization will enable the management to identify risks, assess risks, and manage the risk, whether business risk or operational risk. Are we together? Are we together? Are we together? And there is a way in which risks can occur. Are we together? Risks can arise or change due to what? Due to circumstances. You can employ new personnel. Because you employ a new staff now, it may reach you. Because if that personnel does not have the skills to identify risks or how the risk process work in that organization, what happens? The organization will be exposed to what? To risks. Are we together? Like changes in the operational environment of the organization can also cause a risk. But let's go to the third component. We call it what? Information system. Now, what is information system? Information system. To conclude now, that means if look at it now, a weak internal control system of an organization will not be able to what? To identify risks, to assess risks, and to manage risks properly. That means inability to identify risks will lead to what? To weak internal control or ineffective internal control. Are we together? Now let's now go to information system. Information system. Information system. Let me write it boldly. Now, when we say information system consists of infrastructure. Are we together? Infrastructure, and that infrastructure may be software or maybe physical or hardware infrastructure. Are we together? Look at it. Your laptop is an infrastructure. Are we together? Your hardware, your laptop or your desktop computer is an infrastructure. Are we together? Maybe your organization you need, maybe your transaction is being performed online. Look at it now. Your transaction is being performed online, so you need internet for you to perform your transaction or to prepare your account. That means your router is also part of your what? Your infrastructure. Because if those things are not available, you cannot what? Provide or perform information. Look at it now. Look at this. Look at this. What do we define accounting? What do we call accounting? We say accounting is the process of identifying, classifying, summarizing, and interpreting what? Financial information. So what information system provides is an information. That means we are looking at what does information system comprises now. We say one is what? Is infrastructure. Two is what? Software. You know there are some organizations when they prepare their accounting record is on Excel, they don't use accounting software. There are some that they perform it using software. Even their sales, like all these supermarket, if they want to sell something to you and pay, you pay using what? They process it using what? System. There are some organizations, there are some supermarket, maybe medium supermarket, where all these things they don't have. What they will just do is that once the payment is made, they will write the receipt or check your listing and just go like that. Are we together? So, system, software is also part of the information because that for you to generate information about the sales now, you need what? The software. Are we together now? People, some software and those hardware structure, you know, the hardware or the component, the infrastructure, books is also part of the infrastructure. All these your accounting books, all your ledger, journal entry is part of the infrastructure. Are we together? Look at this now. People, it's not people that will prepare the receipt, that will write the receipt if it's manual you are using. The software, is it not people that will process it on the software? That means people is also part of the what? It's also part of the information system. What about the procedure? There must be a procedure that must be followed. Are we together? There must be procedure, lay down rules or lay down rules that must be followed. Are we together? Are we together? You know, some organizations they have procedures in which sales can be what? Can be performed. Some organization, the procedure in some organization is different from in other organization. Am I right? Our information system is comprised of what? Infrastructure, physical and hardware components, the software, people, procedure, and data. These are the things that makes up the what? The information system. If any of this is what is absent, are we together? If it's absent, especially when, look at it now. Are we together? That means it shows that the internal control within our organization is what? Is weak. Because there must be availability of these components to make up the financial information. Are we together now? Are we together? Are we together? Now, look at this now. Please note this. They said infrastructure and software will be absent or have less significance in the system that are exclusively or primarily manual. That means you may not decide to have computer or software if what they are using is they are recording it on a book. So what is important in one organization as the information system may not be important. That means if what they are using, that means the people, the procedure and the data is going to be very important, will be the component or will be the element of information system in a system where they are using manual. But if any of that element is absent, that means the internal control is not being effective. Let's look at people. The people performing or processing that transaction, they are not competent. They don't know about computer. I am giving them to do. What happen? There will be a lot of rubbish performed. That means the internal control will be weak. That means the information or the data they will now be producing will be what? Will be wrong data. Do you get what I'm saying? It's just like incompetent person preparing your financial statement that does not know how to prepare it, or giving it to someone to go and prepare for him. Do you get it? That means because one of the responsibility or one of the essence of internal control is for you to ensure that the qualified person is performing the work. That means people that are doing the work are competent and qualified to do what? Do you know that an internal auditor is also part of if they want to do recruitment, to ensure that the recruitment process is being followed, so that we will not, some organizations, they are part of the people that will come and interview panel. Even they review the recruitment processes, they review to ensure that it's being. So let's move forward now. So number 4 is what? Is the control activities. Are we together? The control activities. And what do you mean by control activity? Control activities are the policy and procedures. They are the policy and procedures put in place to ensure that entity achieve their objective. They are the policy or procedures put in place to ensure that entity achieve their objective. Are we together? That's what we call control. Are we together? Control activities. Are we together? Now they can ask you that in the exam. They can ask you in the exam that what are the types of internal control or control activities. So we have category of control activities or types of internal control. We have category of internal control, or you call it what? Type of control activities. Am I communicating now? Is that you call it control activities or you call it internal what? Control. So we have what we call financial review. We have information process. We have physical control. What I call one is what? Financial. Is it financial or performance review? Performance review. It's performance review, it's not financial. Performance review. Performance review. We have information processes. We have three what? Physical, right? Physical control, right? Alright. Physical control. And we have segregation of duty. Segregation of duty. Are we together? We have performance review, information processes, financial control, and segregation of duty. Are we together? So let's look at performance review. What do you mean by performance review? Performance review is done when you compare the actual performance with the budgeted or with the forecast. Let's say you have budgeted 55 million for electricity this year. On a monthly basis, you are now comparing it so that you ensure that you don't move behind what. Now, it can also be referred to as financial performance review can also be referred to as management control. You know, when you compare, and this financial review is also used to work to supervise the work of subordinates, to perform, to look at. It is also used to what? To supervise the work of subordinates. So let's go to information process. Information processes. Information processes are used. They are controlled that are used. They are controlled, used to check for accuracy, completeness, and authorization of transaction. That is information processes. Look at it now. When we say, look at it now. When you say accuracy of transaction, that means, look at this now. When you are carrying out transaction, you know some transaction may be 2,000, 8,000, 2,000, 3,000. You know some. Look at it now. When you have 2,000 plus 8,000, it's going to give you 13,000. Like it's going to give you 10,000 plus 3, 13. But I've seen some people commit fraud. When they want to write the total amount, you know it's 13. They can write 15 there. So if you don't check for the accuracy of this sum now, you will not discover, you will think that everything is right. Are we together? You know, there are some transactions that they may be omitted when preparing the sales or the invoice or the income and the revenue. That means some staff can pocket it and report that those sales are not made. So you check for what? For completeness too. Now, every transaction in that organization must be authorized by someone. Account department where I work now cannot process any transaction without the approval of the chairman. That means if in an organization we are just processing any transaction initiated by the management, what happens? Fraud and error will come. Are we together? So we are talking about that information processes has to do with what? That means control that are used to what? That are used to check what? Accuracy, to completeness and authorization of transaction. So let's go to physical control. Physical control has to do with control over physical security of an asset. You can't buy an asset now, a very precious asset, and not have a security over it. Are we together? That means that's the control to ensure that that thing is being used for what is being purchased for. Are we together? So physical control are control over the physical security of an asset and to prevent unauthorized use. To prevent what? Unauthorized use, theft, so that the asset will not be stolen or the asset will not be damaged. Look at it now. You know, if in an organization you don't put security over an asset, even the employee in the organization may be using that asset anyhow. I've seen a situation when someone used Camry, Toyota Camry of an organization to pack blood to his site. Blood. What will happen to that car now? It will be getting damaged gradual. So segregation of duty. What segregation of duty is saying? He said that control under segregation of duty means that involve assigning different persons or people the responsibility of authorizing and recording transaction and maintaining the custody of the asset. That means involving what? Assigning different persons or people the responsibility of authorizing, recording transaction and keeping the custody of an asset. Look at it. That means segregation of duty is saying that you should not allow one person to perform the what? All this responsibility. Look at it now. If one individual is the person authorizing, processing, and keeping the custody of of an asset or a record, what happens? It will be very easy for the person to commit what? Fraud. Am I communicating? Are we together? Are we together? Now, before we go there, let's look at this example. Before we go to monitoring of control, let's go to this example. In page where someone should read that page. 161. Page 161. Where someone should read. So let's go to page 161. Example on page 161. And that example is of control activities. He said one part of the sales system at Dolani operates as set out below. We have order received by phone calls. Orders are received by telephone. Orders are received by telephone. Full stop. On receipt of an order, a clerk enters the details into the system. B. The system checks the goods are available. If so, a dispatch note is produced and an email to the distribution center. C. The distribution center, are you seeing now? The distribution center staff pack the goods and dispatch them with 2 copies of dispatch notes. On the receipt of the goods, the customer signs the dispatch note and 1 copy is returned to the account department at Dolani. They said the account department flagged up the dispatch note on the system to indicate that the goods has been delivered, and the system automatically produce an invoice and email it to the customer. An exception report of all invoice dispatch notes is produced weekly. He said require set up an example of each of the above five types of control activities set out in International Standard Audit 315 as they might operate in Dollani system. What are they? I told you that it can be called what? Category of internal control activities, or category of internal control, or types of internal control. Now, how are we going to answer it? We forget we have financial review, information processes, we have physical control, and we have segregation of duty. Now, it's a case study questions. Are we together now? Under financial review, what are we saying by financial review? To compare the what with the budgeted with the what with the actual, right? Now, that means in relation to this case study now, what are you doing? That means the management to compare the budgeted sales to the actual sales, so that you know whether if the sales drops, they will know, so that you can ask questions. Are we together now? So the manager should compare the budgeted sales to the actual on a monthly basis, so that it will enable them to detect significant sales, or when there is significant sales, or when there is the sales drop, because they may be collecting another, and the money and the cost, their staff may be sabotaging it. In some organization, some staff may have their own store. When they receive, they say they receive order from COP, they will just phone their secret warehouse to go and deliver this, and the customer will pay, and those people will be losing customers. So if sales drop, or if there is significant sales, they will know what contributes to an increase in the sales, or what contributes to the decrease in the sales, so they can monitor the activities of their sales. So we have talked about performance review. What is information processes? What the information processes say? Information process has to do with you what? Testing or checking for what? Accuracy, completeness, and authorization of transaction. Now, in accuracy, look at it now. In information processes now, that means what you will need to do is to ensure that, look at it now, information. That means there should be what? There should be control in place to test the sales system, to ensure that it is providing what? An accuracy documentation. There are some system, sales is being recorded in it. Sales is being performed on that system. But is that sales capturing all the sales made? Is that system capturing all the sales made on the platform now? Are we together? Now, that is what you are going to do in information system. Are they capturing it accurately? Are we together? It's just like someone transfer a data to me and say it processes the data, and when the message is being sent, I discover that the data is below the amount, and the person insisted that it is what he processed on it that is 4 gig that he processed on that is POS. That's what the data. If you showed, are we together? That means that transaction is not capturing what? It's not being accurate. If you are saying that we have made a sales of 50 million, when we add all the sales together, if it is not giving us 50 million, that sales system is not what? Accurate. That means there should be control over the system to provide an accurate what? Transaction. Accurate record of transaction being processed on it. Now, don't forget also completeness. Is it capturing all the sales made? Is it documenting all the sales? Are we together now? Are we together? Are we together? Now let's go to the physical control. Physical control. Now, you know the system they are using, but the physical control we are looking at is over the what? Data. Are we together? Look at it. They said access control over the sales price master file. You know, in each of the sales, if they want to sell something now, that system will identify if you buy this marker, the marker is what? Is 2 naira. Now, if there is no physical control over it now, that means some authorized person can alter the what? The amount. Are we together? Now look at it now. That means for them to, are we together? For them to have control over it now, that means there must be what? There must be password to put security over that what? Over that system. Look at it. Access control over the sales price master file, such as access only being possible by a high system password. Now, why do you think people put password on their system? To prevent what? Unauthorized what? Usage. That means, look at it now. That means the sales manager should be the person that can authorize the what? Or that can change the price of item under the what? Inside the what? The system. Are we together? And the file, you know, file is the document, is the data. You know, as if you have used software before, just like you using an app, a app. You know, you can generate your bank statement, transaction you have called, the debt. That's what the reason why there is password on your system on that app is to put security over it, so that someone will not just pick your phone and transact. That's why you put password that it is only known to what? To you. Now look at it now. We have 3 is what? 4 is what? Segregation of duty. Segregation of duty is saying that, look at it. There will be someone that will receive the order. There will be distribution center. What you call dispatch note will be sent to what? Distribution center. That distribution center will dispatch the what? The goods. They will provide 2 copies. And that 2 copies, they will give one to the customer, they will return one to the accounting section. Just believe that it is one person that is doing all those things. So, no, it will not be order. There will be what? There will be fraud. There will be unvarnished sales invoice. That means different employees should be responsible for putting in order, dispatching goods, and flagging up what? Dispatch notes. That means those items that has been dispatched. Because if one person is doing it, it will be very easier for the person to commit fraud. Because there are some goods that has not been dispatched, that will say it has been dispatched. Are we together? So what segregation of duties is that don't put one work, don't put different responsibility in one person's and divide it. Are we together? Now, we have, when it comes to internal control in ICT system, you know ICT, when company is being using system base for their operation, types of control you can put under it. Are we together? We have what we call general control and application control. So in what do I call control, internal control in ICT system. So internal control in ICT system. So we have 2 types of control. We have what? General, and 2 we have application control. Now, what is general control? General control are the policy or procedures that relate to different what application. Look at this now. Look at this. You know some organization, the application of the software they are using for their sales may be different from their payroll. It's just like our organization. What they are using to generate revenue is different from what we are using to prepare our payroll. What we are using to prepare our payroll is we are using Remita, but we are not using Remita to generate. Can we see now? That means, but there should be control that what that there should be control that will be put in place to what to cover those what different systems. Are we together? That is what we call in a general control. General control had the policy or procedure that are related to what? That means it affects different what? Application. Are we together? Are we together? Are we together? Now let's go to examples of what do you call of general control. What are the categories of general control? Look at development and computer-based information system, development of computer-based information system and application. That means if you want to develop a system or an application, what are the things that need to be put in place? Who are supposed to authorize it? Who are supposed to design it? So I can't be going into the details. Documentation and testing of a program change. If you want to, in your application, maybe your payroll, you want to change some things there. What are the controls that has to be put in place to ensure that it is being documented and those controls are being tested in accordance? Who will authorize the change? Who will authorize the change in the program? How are we together now? So I won't go much in details in that. Please, you can look at that. Also, we have prevention and detection of unauthorized program change. That means if you want to change something now, if someone that is not authorized wants to change a program to a software, are we together? There should be a control in place to ensure that that person does not have what? Access. And if the person has access, if the person is to try to change the system application, it should be able to detect that this person is not is an unauthorized person. Are we together? Now, what we got? Prevention of use of incorrect program or data file. There are some systems that if you put the wrong file here, it will tell you that this is not the format or this is not the file needed for such. Are we together now? Sorry. We have prevention of unauthorized amendment to data file. You will see the control area there. So I don't want to go too much on that. So let's go to application. You know, we say general control is applicable to what? To different applications. Why? Each of these applications will have their own control. So what is application control? Application control are control over individual application. That means payroll system that we are using now, we have its own what? Control. But general control is applicable to what? To all of them. Are we together? Are we together? So you can look at the example under each one of them. But let's move now. Now, look at this now. You may be asked in the exam, you may be given an example in the exam. He said, look at this now, in page 170, second paragraph. He said, the exam may include a question based on the case study in which you are asked to comment on the weaknesses in the internal control of a client's entity. That means they are asking you to identify the weaknesses in the internal control. So you may be given a question and you may be asked to identify the internal control. And when you identify, you explain why that weaknesses in the internal control. Why are we? why is it a weakness in the internal control? Are we together? And you may be asked to suggest how to improve the what? The internal control. What do I say now? You may be giving an example, is a case study question on now giving a case study scenario and ask you to what? To identify what? The weaknesses in the internal control. And two, and explain the what? Their weaknesses. Why is it weaknesses? And how to improve that what? Weaknesses. Are we together now? How can we improve it? You know, in explaining the weaknesses, you need to also explain the nature of risks that weaknesses will what? Will create. Are we together now? So you may be given a case study where you may have to identify the weaknesses in internal control. You may say Mr. Shegun Kiniko has a company and this, you identify it. You also what? Explain the weaknesses in the internal control and how the risks that weakness is going to what? Create, and how to what? To improve. You can suggest. Now, how are you going to identify it? How are you going to identify it? Are we together? For this type of question now, if you want to solve it, are we together? To identify internal control. Now, you look at the control environment. What I say about the control environment? The control environment is the what? Is the attitude of the management and the employee towards what? Internal control. So if the attitude is low, they are not committed to internal control, is one of the what? Weaknesses. Because if the senior management are not being what? Serious with internal control, that means it's a weakness. What of lack of check and control? That means if control is not put in place, are we together now? Like, let's say an asset is here now. There is no way to what? You keep an asset on the open space. Anyone cannot have an access to it. That means there is no control over that asset. That means that there is no control. Meaning that unauthorized person can have access to that asset. Are we together? When there is lack of control, are we together? Or there is no one checking the activities of people performing or people operation in the organization. No one to check the activities. Are we together? No one to control. No one to check whether you are doing the right or not. That means there is no internal control. Are we together? Segregation of duty. One person will perform several work is a weakness. There is no physical control. Anyone can just have an access to your accounting books. They are not keeping in the same place. Your check. There is no safe box to keep your check. Are we together? Are we together? That is, there is no control. There is no physical control. That means it's a weakness. Now, the personnel preparing or performing the work, they are incompetent. That's a weakness. That means if an incompetent or unqualified person is performing a work, what happens? He will provide a work, a poor quality. The quality of the work will be what? Will be poor. It's also a weakness. Are we together? If the organization structure, are we together now? If the management and organization structure, that means the management structure or the organization structure that they have may be inappropriate. Am I communicating now? May be inappropriate. That means no one is supervising the work. Everybody is just doing as they like. Or the internal auditor is reporting to the finance director. No one is checking the activities. No one is checking the activities of the subordinates. So everybody is boss in that organization. Wow, there is weak internal control. If it is an that means information technology that they are using, maybe software and application, there must be what? General control and what? Application control over. An application control will also become specific what? Control for each of the application. General control is over the what? Over application. You are right. Are we together? Now, look at it now. You also need to look at another way that can cause weaknesses in internal control is what we call computation of work or risk of computation error. Are we together? That means there is no one checking for calculations. There are sometimes when I prepare something in the office that it may be what? Wrong. It's someone that will now detect it. But if they just have said, that's right thing, they just approve, what happened? There will be error. Error will be what? Will be occurring. So, computational work and risk of computation error. There may be weaknesses in the procedures for making and checking calculation. So there's no one to check those calculations. Okay, we have made a sales of 50,000 naira for the month. No one to add those sales together to determine whether the sales is even correct in the first place. What about lack of internal audit? That means internal audit department, they don't have internal audit department in that organization. What happened? That means there's no one to review the internal control within our organization. And this can cause what? Weaknesses. It is when you identify the weaknesses and the risks that you will now explain the risks in which our weaknesses can create. They can now ask you that you should provide what? Suggestion to how to what? To strengthen the internal control. So let's go to lastly. Not all these things is still on that. That's why I say control activity is, you can say that it's voluminous more than the other component. So let's go to monitoring of control. You know when you have put control in place, you will not just what? Leave the control like that. Are we together? You will not just leave the control like that. It's equally important that the control you have put in place is adequate, is proper. How can you know that the control is proper or is adequate? Is by what? By monitoring that control. You can't just put a security man to be watching over an asset and just feel free that the security man will be doing his work. That means you must put monitoring. You must have to monitor the activities of that security man to know whether he's doing his duty or not. I'm just giving you an example. Are we together? You have to look at this control. Are we together? Are we together? Now, it is important within an internal control system that management should review and monitor the operation of control to know whether there is any deficiency in that control to now improve on the control, and they must do it on what? On a regular basis, so that to ensure that that control they have put in place is still what? Adequate and proper. And if there is any area that improvement is needed during the monitoring of the control, they will what? They will discover that. Are we together? Are we together? So let's stop here for today. So continue later.